What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 47. These are the trades for December the 15th, 2023. We made some trades, so let's go ahead and get into it. So the first thing we need to talk about, let's talk about Thursday's closing price. So Thursday's closing price was 37,648, and that will play a major role throughout the entire session, not only from 8:30 but all the way up until 4 o'clock when the market closed. So let's go ahead and let's talk about these trades that we made. So trade number one right here, I shorted this higher low failure thinking that the selling would continue down to yesterday's closing price. Now, when it comes to a higher low failure, this is exactly what I look for. I look for prices to be in an overall downtrend, and then I look for a higher low to get formed as a pullback type of variation. And then I want to see prices continue to move higher. But then eventually I like to see a lower high get put in, and I want to see those lower highs eventually lead to a break of that higher low level. Once they break through, I look for prices to come back, retest that break, and then I short from there. So that's pretty much the idea I had on trade one, but I guess I was just a little bit too early right here because they pushed back above the higher low level, formed a new higher low, and then continued on. So I took a loss on this one, and I think that was just unavoidable right there. But what I would say is that maybe this could have been a smaller loss because I could have got out right here once I saw the higher low, but I just gave it one more candle, and that one more candle ended up with a full stop. So just in the future, I got to remember, like, sometimes if the higher low isn't going my way, it's important for me to just get out. I don't have to let it come all the way back to a full stop. That's very important, because if you don't take a full stop on some of your losses, that gives you more of a cushion room for those profitable trades that you will have. So always remember that. Now, the only thing I would say about this one is that when prices came back down again, now on Friday, we did have news come out. I can't remember what it was, but it was something important. And that pretty much led prices to break past this level where the higher low was. But look at this one wick right here. This one wick came back to retest that level, and that was pretty much exactly what I was looking for. But I passed on that trade because I wasn't quite sure. But I think now, looking back on it, I should have definitely took that trade when it gave me a better selling opportunity on this push. So then prices continue all the way down, and that pretty much led me to trade number two. So at 2, I shorted here with 5 contracts, and I took prices back down to yesterday's closing price. Now, this is something new that I'm kind of integrating into my strategy, which is I call it a momentum type of play, where I see prices making a very strong momentum move into a very key level. And for me, most of the time, that's yesterday's closing price. Either that or the top or the bottom of a zone. Those are really the only 2 scenarios I want to use this type of contract size in, because I see that prices have a lot of momentum, and more than likely they're probably coming back to touch that level. So I just load up with some size, and I anticipate prices making that move all the way back down. Now, what's important is that if you take a trade like this, it has to be momentum. And in today's, well, on Friday's scenario, that was the case, because we had one large volume candle followed by a second, a third little smaller one, but then we pulled back, and then we saw another large volume wide range candle that pushed prices all the way back to yesterday's closing price. So that's a new tactic that I'm looking to use right there on 2, and I did this 3 other times throughout the day, so we'll talk about those as we get into them. So after we hit yesterday's closing price, we push down, create a higher low, and that brings us to trade number 3. Now at 3, I went long here based on the higher low, but I got out as soon as prices broke support, and I feel like that was the best decision to make. And that's really what you want to do when it comes to trading that higher low setup. That's what I should have done on 1, but I did the right thing on 3. And I got out right here because I did go long right here based on the higher low, but I saw this lower high get formed right here, followed by this second one, and then a third. Well, the third hadn't got formed yet, but we did have 2 before I started to sell. So I was like, you know what? We had a lower high and we broke past the level of support. Let me go ahead and get out before prices continue down. So then I came back on trade number 4. I flipped my position from trade 3 and I went short, but then I got out once I saw this little small micro higher low right here. Now, this didn't turn out to be the higher low that I thought, and prices continued down, but that's just a rule that I always follow. If I'm short and I see anything that looks like a higher low, no matter how large or small, no matter how strong or weak, I get out of my short trades, because whenever I see a higher low, the short trades they stop working for whatever reason. That's how the market goes. So right here, I got out, and I was happy about that. So on 3 and 4, pretty much took 2 break-even trades, and I'm okay with that. And then I come back on trade 5 right here as we continue to move up towards yesterday's closing price once again. So I went long here based on the higher low, and then I took prices back up to Y.C.P, yesterday's closing price. So Whenever I see that higher low get formed, I just wait for prices to come back, retest it. I go long on the retest and expect prices to go back up to the next major level of support or wherever my target might be. So that's pretty much the strategy that I used on trade 5. And that was pretty much all I did for the pre-market session between 8 o'clock and 9:15. So let's go ahead and talk about what happened once the market opened. So this is part 2. So let's talk about trade number 6 and trade 6 through 10. So at 6 through 10 right here, I was pretty much playing the zone with every single last one of these entries that I took in this scenario. So look at how we were trading in a zone between 37,595 and then 37,575. Now, this zone was a little bit different than normal because this zone actually had a whole lot of wicks, not only on the top up here, but also towards the bottom on the lower levels. Now, notice how every time prices came back to the bottom of the zone, they actually wicked past it, but they never really closed outside of the zone. They were always closed back inside of the zone. But I kept getting caught up on the wicks, and that's what happened on trade 6 and 7. And notice how on 6, I went long at the bottom of the zone. I got wicked out. I feel like that's a loss that I had to take because at the time I didn't really know that the zone would come back and test all of these wicks down here. So I feel like 6 was a loss that I had to take. But then on 7, I came back and took the same trade expecting for the bottom of the zone to hold, but I got wicked out again. So that should have taught me right there that, okay, this is a zone that's going to have a lot of multiple wicks. And I think that's something I got to work on, which is just being able to adapt a lot more quickly in the moment, because throughout the rest of these trades, I did adapt and I did make profits, but I feel like I should have done that maybe one trade a little earlier, because that one trade, it makes a difference. So I took pretty much the same trade on 7 as I did on 6, but I came back on trade 8 on a very exact candle. And as prices spiked back up through the zone, I went long as soon as we touched the bottom of the zone. And then I took that long trade back up to the top. So then I came back on trade 10, did the exact same thing, went long, but this time I waited for the zone to actually wick down. And as it came back into the zone and closed inside of the zone, that's when I shorted at, well, excuse me, that's when I went long at the buy at the lows of the zone. And then I took that all the way back up to the top of the zone, and that was on trade 9. Came back on trade 10, did the same thing, but the buying momentum really kind of fizzled out a little bit, and I got caught on a wick down once again. So this zone scenario, I played it okay, but it was definitely some improvements that could have been made. And I think the biggest lesson to learn here is that sometimes the zone doesn't always have to be perfect. The closes might be inside of the actual zone that you're trading in, but the wicks might extend a little bit further past that. So make sure you take that into account so you don't get caught up in the wicks, because those wicks, they can definitely stop you out if you don't take them seriously. So always remember that. So that was trade 10. So we come back on trade 11. Now 11, 12, 13, 14, 15, and 16, they all came down here towards the lower range of this zone. So what I also want to talk about is the fact that sometimes you can have multiple zones back to back, even though they might not be in the same general price area. Notice how this zone traded towards the top level of this entire range. So first things first, let's define the entire range that I'm actually talking about. So the entire range extends from this level of resistance at 37,595, this blue line right here, all the way back down to this blue zone at the bottom at 37,530 to 540. All right, so that's the overall range. But within this range, the range is split in half by this midpoint line that pretty much goes directly in between zone 1 at the top and then zone 2 towards the bottom down here. So a lot of times in the market, you can see something like this where you have an overall range, but it's two zones, but they're broken up. One is above the midline and one is below the midline. That's pretty much what we were looking at today. So 11 through 15 came at the zone that was below the midline. So let's go ahead and get into it. So at trade 11, I went long here at the lows of the range, but I should have bought lower. And I think that's one of my the biggest things I need to work on, because I always try and outsmart the market, meaning that even though I see that the bottom of the zone is right here, I'll still go long at the top of the zone because I feel like everybody is looking at the same prices at the bottom. So more than likely people are going to try and get in front of that level and start buying early. But you know, that's a good idea, but sometimes you don't want to overthink it. You just want to trade what you see. If the bottom of the zone is down here, I feel like that's where I should be going long, because if I'm going to go long right here at the top of the zone, there's no way I can put my stop at the bottom of the zone, because, well, that's where prices are probably coming back to. So maybe I would have to widen my stop if I took a trade like that. But then again, that would just increase the risk. So I think the better solution in this scenario, the better option would just be to go long towards the bottom. All right, and just keep your stop regularly what it usually would be. So I think that's the better decision. Go long at the bottom of the zone. So that's what I learned on trade 11. All right, so then I come back on trade 12 and I went long here based off of this higher low that got formed. And that's a great idea, but I still got to remember that when it comes to that higher low, I have to go long towards the closest levels that I can get to that support price, because support price is really where all of the demand is. The further you buy away from support, the more likely it is that prices are probably going to come back, retest support. And that's where my stop was, right at support. So that's why it makes so much sense to go long at support. So that way my stop can be below support. And if the market does come back and hit my stop, I definitely want to be taken out of the trade, because that's my sign that it's not working. So it's always important to go long. And that's why you want to make sure you buy low and sell high always, especially when it comes to the higher low strategy. That's very important. So then I come back on trade 13. I see prices hit the bottom of the zone one more time. So once they wicked up off of it and bounced back, they pushed back through that higher low level that got established from trade 12. So once they pushed back above that level, that's where I took the long trade at 13 right here, and then just took that back up to the midline at the top of this overall, well, back to the midline right here that we were talking about from before. So then that was trade 12. So I come back on, well, no, that was trade 13. So I come back on 14. I use the exact same idea that I had from 12. I saw prices spike back down to the bottom of the zone, or the bottom of the overall range, and then they peaked back up. So I went long as they came back to retest that support level, expecting for them to come back to the midline. I didn't really see the buying that I wanted right here, so I went ahead and just got out at trade 14. Okay, and then I come back on trade 15 and I pretty much went long at the same price that I did on trade 11, and I got the same results. And that right there is just more reinforcement that if I see the bottom of the zone is down here, that's where I should go long. That's where I should go long from. No questions about it. That's just what I should do every single time. And that's the biggest lesson I learned, because if we look at all of these trades, we look at 11, 12, 13, 14, 15. Yeah, some of these trades, they were profitable. And overall, when I came out of this section, I was net profitable. But I feel like the best decision at this time would have just been to go long every time it came back to the bottom of the zone. You know, that trade worked every single time and would have never failed. Not on 11, 12, 13, 14, or 15. So I could have made bank throughout this entire little junction right here in prices. So that's the lesson I learned. Just remember, trade what you see, and you don't have to force it. Don't overthink it. If the level is right there, that's where you should go long from. Simple and plain. So then once we made that last bounce off of the zone down here towards trade 15, after that got stopped out, we pushed back above that higher low level from 12 one more time. And that's where I took the long trade right here at 16. So I went long here as prices got back above the higher low, and then I just took that back up to the midline right here. All right, so then we hit the midline, actually made a higher low, and that is what finally got us above that midline and brought us back all the way up to the top of the overall range that we were talking about from earlier. So once I saw a higher low get formed right below the range right here at 17, I waited for the higher low support level to come back and get retested. Then I went long right here and just took prices back up to the top of the overall range that we were talking about. So that right there is exactly what I'm looking for when it comes to a higher low strategy. All right, so let's move on to trade 18 right here. Now trade 18, this is very interesting because this is a setup that looks good according to the price action, but it doesn't align with the overall market context that we were trading in. Because if we, let's go look at the daily chart for a quick second, because where we're at right now in the overall stock market, it makes a big difference. Because on the Dow Jones, we're making new all-time highs, not yearly highs, not like 2 yearly highs. No, we're making all-time highs. It's the highest price that prices have ever been. The previous all-time high was over here at 36,832. So these are for the Dow Jones futures, the YM contract. So 36,832 was the highest. Right now we're at 37,661. So that right there tells us that we're in a buyer's market, which means that you got to remember that most of the short trades that you're trying to look for, if they're not quick scalps, like you're in and you're out, more than likely they have a lower chance of working. It doesn't mean that they can't work, because there's going to be some trades that we talk about later on where the short trade was very lucrative and it could have been taken for a lot of points, but that's going to be very few, far and in between. Most of these days that you see will probably be up days. So all of the short setups that you like to use, they might have a tougher chance of working. And that's pretty much what I went through right here at 18. because according to the price action, I shorted here because we were in a zone. Well, we were in an overall range. We pushed back up to the top, and then we made a lower high right here that pushed us back into the zone. So that's exactly what I look for. To me, that's a false breakout. So once I see a false breakout, I look for the first lower high, and then I look to take prices all the way back down to the lows of the zone. So I was anticipating a lower high getting formed right here at 18, but I was just wrong about that one. And I feel like on this trade, what I should have done was, as soon as we made this lower high, notice how it pushed us into the zone. And on this very next candle, this wick came back to retest the top of the zone, well, the top of the range right here. So I should have been shorting right there and then taking it back to the midline, and that would have been a great short. But at 18, not only did I anticipate a lower high getting formed right here, but I also shorted towards the lows of this entire downswing. The downswing started right here from this swing high. We pushed lower, had a lower high, and the exact lows of the swing were right here. And that was something that I was able to identify in real time. So in situations like those, I just have to remember, don't short from right there. If anything, you short it as it comes back to the top of the zone, and you'll still at least have a chance to get out on this candle with a little bit of profit, or get out on this candle as it comes back to break even, or at least just get out for a small loss when it comes back to the lower high. So you have three options to actually mitigate this loss and not have to take a full stop loss option on something like trade 18. So that's something I got to remember going forward. So then we continue to uptrend, right? We have a higher low right here. We continue pushing up, and then we make a lower high, a higher low right here at trade number 19, right below yesterday's closing price. So I waited for prices to come back, retest this higher low, and as soon as they did retest that support level, I went long right there and took it back up to yesterday's closing price right here at the purple line. And that was trade 9. And we have some trades over here. These are, well, that was trade 19, my bad. We have some more trades over here. That's part of part 3. So let's go ahead and move on to those. So this is trade number 20. So as prices continued to move up, they made another lower high, another higher low right above yesterday's closing price. So I just waited for prices to come back, retest the support level. As soon as they did, I went long, but this time I didn't take it all the way back up to my scalp target. I just took it back up to the top of this overall like blocky consolidation zone, because I wasn't quite sure if prices would move up past that, and they really didn't move too far after that. Now, what's really interesting here, if you look at it, look at this beginning point at trade 20 and follow that all the way over across the trade 28. We pretty much traded in a very large range, or a very large zone, in between 37,675 and then 37,640. So about a 35-point range, which was not too bad, especially in the afternoon session. So let's go ahead and talk about how I played this overall range. So for 21 through 23, I went long at yesterday's closing price, which were some very good entries. But the only problem was I just didn't take profits when I had them, and that cost me, because on this first trade, I took a small loss because I saw that I went long here and then prices broke back below yesterday's closing price. So I said, you know what? My support level that I went long from has been broken. Let me get out. So I took a small loss on that one. That's okay. But then on 22, I come back. I went long. I had a chance to get out as prices came back towards this top level. And I would say on that one, maybe it was okay for me to let my trades come back to break even, because at that time, I really didn't know that this level would hold up and act as resistance. But then when I come back on trade 23, I should have definitely taken profits up here, because I went long right here on this candle. And I could have taken profits as prices got back to the top of this range that we were talking about from earlier, because we were seeing that this right here is acting as resistance for right now. So if you go long, that's where you should be getting out. So on trade 23, I think that's the biggest lesson I learned. Just, you don't always have to go for that profit target that you're aiming for. Just take what the market is going to give you at that point in time, and then come back and take the next best trade. So it's always important to remember. So then at trade 4, I went long here again, but I went long. Look at where I went long. This was probably the best trade that I took within this range. 24 was, and 26. Now 24, I went long exactly at the bottom of the range, as I should have. We had a false breakout past that candle. As soon as we got back into it, I went long. And then this time I took prices back up to that level of resistance where I should have been getting out from trades 21 all the way through 23. So I kind of made back up for some of those losses that I took on 21 and redeemed myself a little bit. And we pretty much came back, tested the top of the range, shot back down to the bottom. I missed this range entry because I was actually eating lunch at this time. But when I came back, we was at the top of the range, came all the way back to the bottom. And this entry, I missed this one also, but this was just on me right here. I should have been getting in because saw prices come back to the bottom of the range. When they first get there, I don't necessarily just want to go long. I want to see some type of bullish activity. And that's exactly what happened. We shot down to the bottom on this red candle, bounced up, came back, retested it not once, but 2 times, and then moved up. So I could have got in somewhere within these 3 candles. That would have been the ideal entry. But even if I missed that one, once prices broke back above yesterday's closing price, look at this green candle right here. Look at the wick. They came back to retest yesterday's closing price. So I could have at least took the long from Y.C.P if I didn't get it from the bottom of the zone. So just some good ideas that I can use going forward in the future. You know, I wish I had a time machine to go back and take these trades, but that's why the market gives you lessons. So you can learn, and then next time you can do it the way that you envisioned yourself doing it. But I was still able to catch a pretty good trade right here at 25 because we came back, we made a higher low right here as we were on our way back up to the top of the zone. So if I see bullish signs like this in the middle of a zone, I'm more likely to go long because I expect for prices to go ahead and just test the top, because more than likely when you're in a zone or in a range, if they test the bottom, it's only a matter of time, more than likely most of the time, before they come back and try and test the top once again. So once I saw that higher low, that was the confirmation I needed, went long at the support level, added to my position as it was going in my favor, and then eventually just took all of those contracts back up to the top of the range, and that's where I got out from. So then on trade 26, we saw prices come back to the bottom of the range right here. So once again, I went long, and this time I just took prices back up to yesterday's closing price because I wasn't really quite sure what this price action would look like going forward into the future, because I'm expecting for the top of the zone to get hit. But once I saw prices kind of get rejected right here at what used to be a previous higher low, but now that support level is acting as resistance. Once I saw that rejection, I was kind of hesitant. So I just started using that level as my exit point. So that's pretty much what I did on 26. Tried to get out towards that level, but as you see, prices kind of moved quickly away from it. So I took what I could get while I still could. But then they formed a higher low above yesterday's closing price and came back up. So, you know, sometimes you could hold your trades, but you got to make the best decision that you can in that moment. And I feel like that's what I did on 26. Now on 27 and 28, this is kind of when I started to go off the rails a little bit and make some bad decisions, really from 27 through 30. So let's go ahead and talk about that. Now at 27, I went long right here because a lot of times when I've seen a zone, if you have a higher low that gets established in the middle of the zone before, that level would come back and act as a support level that you can go long from as prices break back above it as they're on their way back up to the top of the range. So that's what I thought I would see today. And I went long right here at 27. And I feel like for that trade, honestly, that was just a loss I had to take because that was something that I've studied, that I'm willing to get into. And if I take a loss, I take a loss. So I'm okay with that loss. But on 28, this is where things got a little bit shaky. I shouldn't have took this loss because 28, if you look at it, was the exact same trade as trade number 27. I went long as prices broke back above the, I guess you could call this midpoint level from the higher low from 25, trade number 25. But that was the exact same thing from 27, and I got the exact same result. So I think that comes back to not trying to force a trade that's not there. If it didn't work the first time, it's a reason. So that means I need to wait for a better signal in the market. You know, don't try and chase behind the trade and force it to work. So that's the biggest lesson I learned right there. And also, trade 28 was even worse because not only did I repeat the same mistake from 27, but I also doubled up on the contract size. So usually I trade 2 contracts. That's what I was doing today. On this one, on 28, I traded 4. So I went long right here on this candle and then long on the very next candle. So just, you know, not the best decision, but even still, I had a chance to get out for a little bit of a profit or at least that break even. And then I just watched the trade come all the way back down to my full stop loss. So even on my bad trades, I still had an opportunity to get out. So I need to take advantage of that in the future if I am in a position that's not going in my favor. That's very important. You know, if you feel like you're about to take a loss, don't wait for that loss to happen. You know, you can go ahead and get in front of that loss, be proactive, and make sure that you don't have to take that full stop loss. And best case scenario, maybe you make a little bit of profit or you just come out at break even. So that's always important to remember. So then I come back on trade 29. So let's go back to part 1 for a second. Remember what I talked about on trade number 2. I was talking about how I'm using momentum moves now and using size to catch a momentum move back down to what I think is a major price level. So at 29, I saw the momentum that prices had after they actually broke out of that range that we were trading in. So I assumed that they would come back down and retest what used to be the top level of that zone that we were talking about from part number 2 at 37,595. That's what this blue level was right here. So I'm expecting for prices to continue, and they did that at trade 29. But first they pulled up and they wicked back up to this one candle. They retested that, and then that's when the downtrend continued. So sometimes when it comes to trading that momentum move, this is what could happen. You could short based on the momentum, but the momentum might not go your way, and sometimes you just got to take that loss. You know, that's part of that strategy. That's how it goes. And if we read the notes real quick before we go for 29, it says shorted and tried to ride momentum here, not my best entry. And I say that because I was shorting towards the lows of the swing, and I just feel like even in a situation like this, it's always better to short from a higher price. So if anything, maybe I could have shorted when prices came back to retest this wick when they pushed back up on this candle right here. I think that would have been the ideal entry for 29. So let's go ahead and move on to trade number 20 on part number 4. Well, trade number 30 on part number 4. All right. Okay. So trade number 30. So right here, this is 30. I shorted here expecting for the range low to be hit, but I closed this trade when I saw the higher low. And whenever you're short and you see that higher low, that's pretty much exactly what you want to do. So this right here is the higher low that I'm talking about. As soon as I saw that get formed, I'm like, all right, I'm out of here. Every time, no matter what the circumstances might be, if you're short and you see that higher low, you got to get out. So I follow my rules right there. So then we come back to 31 and 32. So remember earlier when I was talking about, because the overall trend on the daily chart was up, the short trades are a lot less likely to be lucrative. But I said there were some occasions where there would be short trades that were pretty good to catch. This is exactly what I was talking about right here, trades 31 and 32. So right here, I just shorted based on a higher low failure. So I caught a good higher low failure, but I didn't really hold it like I should have. Now it gave me everything I wanted. I saw the higher low right here get formed on trade 30. Then I saw prices make a lower high that pushed prices back into the range. They made a lower high inside of the range, and then that lower high pushed prices back down below that higher low support level from trade 30. So then as soon as they came back to retest it, I went short at 31. Went short at 31 right here, but I was a little bit early, so I got out. And then as they came back down and gave me a second retest, I took that trade at 32. All right, so I shorted right here. This trade should have been held all the way back down to the bottom of the zone, because that's where I was exactly aiming for. That was perfect, because I took it from the top of the range and I'm taking it back down to the bottom. That's exactly what I should be aiming for. But I got a little bit scared because I saw prices come back. They came back to this level after I was already in profit. So right here, I was thinking that they were coming back all the way back to the higher low entry point that I got in from, and that I would see all of that profit that I had come back to break even. So I said, you know what? Let me just lock in something while I still can. And I think I felt that way because I had been taking losses from trades 27 all the way up through trades 30. And I just didn't want to give back the gains that I made, because I'm like, look, I've been taking losses. I just need to lock something in. But when it comes to the trades that you take, you can't worry about what your performance was on those trades that came before. You got to worry about trading the trade that's right there in front of you and maximizing that trade for what it is. Now, if we're in a short trade, right, if we break past a major level of support, which is what this blue line was, after we break past that, if the downtrend is strong, they should come back to retest that level and get rejected. That's usually how the short trades go, you know, and this was no exception. So when prices came back to retest this level, instead of me getting out and taking profits, I should have waited for prices to reject and bounce off of that level and continue moving down. And then I should have added to my position and then took that entire contract size back down to my profit target, which originally was right here. So I would have got a perfect trade off of this one if I was able to hold it. So that's the biggest thing I learned right there. Just don't panic when your trades start coming back against you. You know, if the market is going to hold up, it's going to respect those levels, and you add right there. You don't get out. So that's very important to remember. And then on 33 through 36, all 4 of these trades, man, I just took revenge trades because I was frustrated that I saw 31 and 32 go the way that I thought it was going to go, but I didn't participate completely like I wanted to. So I was just trying to short right here, expecting for prices to come back down and retest this level. But You can't see it in this screenshot. So let's go back to part number 3. Well, hold on. What price is that? This was 550. All right, so look at 550. This right here was from part number 2, but this right here was 550. The same level that established this higher low from trade 12 that we interacted with at trade 16 also. That was that same price that we were looking at right here at 37,550. So that's my target that I was aiming for. So once it got down there, it was like, okay, Ty, it doesn't really make too much sense to just look for the last couple of crumbs on that overall bread move that went all the way back down to those levels. You know, I've seen that scenario a lot of times where you have the bottom of the range right here and you think because they hit the top that they're coming back to the bottom. But if it's a higher low or any level of support that gets established like right directly above that level, you use that new level instead of using that old level from the zone. And that's something I knew right here at 33, 34, and 35, but I was frustrated and I was revenge trading, which, you know, it's not good, but I'm human. You know, I'm working on that. That's something I got to get better at, because most of the time, now that I think about it, my revenge trades, they come after trades that I was in that should have worked, but for whatever reason, I didn't execute my exit the way that I wanted to, and I felt like I left profits on the table. So then I come back and try and get all those profits back immediately. Now, that's not the way you want to do it. You can get those profits back, but you just got to wait for your next best trade, and then you execute that trade perfectly when you see it coming around. That's how you do it. You don't want to just chase the market trying to force something that's not there. Because if you look at what I did right here on all of these trades, I shorted at the lowest prices of the entire swing. So that's something you want to make sure you avoid, because it just decreases the probabilities of the short trade going in your favor at that point in time. So that's really the biggest lesson I learned from this junction from 33 through 35. Then we come back on 36. This was pretty much the same as 33 through 35. I shorted at the exact same level. But on this trade, I just got out really quick because I was like, look, if it didn't work over here, why would I try it again over here and short as prices are having a big momentum to the upside? We had a bullish engulfing off the bottom of the zone with 2 large momentum candles. That's not something I should short in front of. So I just got out right there really quick before it got ugly. And I think the only thing that really saved me in between 33 and 36 is the fact that I was taking real tight stop losses. I kept my stop real tight because I guess in the back of my head, I kind of knew that these revenge trades were not something I should be doing, but I still did them anyway. So I at least tried to protect myself. Like, all right, so I just don't take a full stop loss. So if you add up all of these losses in general, this was 4 losses in a row. It should have been 4 full stop losses, but when you add them all up, they come out to about 1 loss and a half. So I mean, I'm not happy I took the trades, but overall, I protected my risk, and that's what it comes down to. Sometimes you won't make the best decisions, but make sure that you just keep your risk very small. Very important. You know, so I come back on trade 37, and this is where I finally started to get back into the rhythm of the market and get back into the flow. So at 37, I went long at the lows of the zone and took it back up to the top, because I just figured that if we bounced off the bottom of the range, we're probably coming back to the top of it. So once we broke past that midpoint, we came back to retest that midpoint once again, and then I took it back up to the top. All right, so we came back on 38. I caught another higher low failure, pretty much from the same exact levels that I did at 31 and 32. So I took the exact same trade and had the exact same results. So if you noticed earlier when I talked about trades 12 and trade 16, let's go back for a second. At trades 11 and trade 15, I took the exact same trade and I got the exact same results, but this time it was on the negative side. But also remember that for your positive trades, that can also work in your favor from taking the same trades from the same places in the same type of market environment and the same type of market scenario. So that's pretty much what I capitalized on at 38. I saw the higher low get formed right below the zone. They broke down below it, made 2 lower highs that eventually led prices to break past that zone. And I was able to catch the short trade back down to this support level from 36. And as soon as they bounced up off of it, I got out right here for a decent little profit. So not mad about that. So then 39, okay, that's on part 5. So let's keep moving. So at 39, I shorted where I closed trade 38 from, but I got out quickly when I saw the buying momentum. All right, because I was pretty much expecting that if we came back and hit this level at 36, maybe we could come back and hit the bottom of the zone one more time like we did before, right before trade 36. All right, so that's what I was thinking on 39. but I saw the fact that we had long tail candle wick right here, followed by a very strong momentum candle to the upside. So I was like, all right, I made good profits on 38. I'm trying to double dip and take more from that trade and get in again at that same price that I got out from. That's just greed working on my part. So let me get out while I still can. So I just took a little small, like 2-3 point loss on that, and I'm happy about that, because if I would have held this trade, it would have definitely came back and hit my full stop loss as it moved and made its way back up to the top of the range. So then I come back at trade 40, and I saw this higher low get formed right here. So I went long as prices came back to retest that higher low support level. But I really didn't see the buy-in come in that I wanted to. And then once prices broke back down below support where I went long from, I got out in order to protect myself from taking a full stop loss, because once you take a higher low trade and prices break back down below support, that means that something is going wrong. So you don't want to just wait around and wait for your stop to get hit. Once prices break support, just go ahead and get out. That's something very important to remember, and that's what I did right here on trade 40. So then that brings us to our last 7 trades of the day. So 41 through 47. So let's talk about 41 through 44 real quick. Now, we had another higher low get formed right here, so I used the higher low strategy. They came back, retested support, so I went long. But once they broke back down below support, I got out because things were getting a little bit shaky. All right, so that was a decent trade. I protected myself on a higher low trade, not mad at that. But now 42, 43, and 44, let's zoom in, because this is very similar to what we went through at 33 and 35, where we're shorting at the lows of the swing. I did the exact same thing here, shorting at the lows of the swing, and it just went against me 3 times in a row. And now that I'm looking back on it, it's so simple. When it comes to a scenario like this, if you want to short, that's okay, because we were trading inside of a range, right, between this higher low and then what used to be the top of the range at 595. All right, so if that's what I'm trading, that's pretty much a zone, right? So if I'm going to short the zone, I should only short a zone from the top. Simple and plain, no exceptions about it. That right there, that's the rule. So this is an example of why you want to do that, because if you short from the lows of the zone, you're just exposing yourself to prices coming back and testing the top. And that just so happened to be where my stop was on all 3 of these trades. So, you know, when it comes to a scenario like this, if you want to short it from the top, because if you look at trade 42, 43, and 44, I could have shorted once right here, took it back to the bottom, made profit. Shorted twice right here, took it back to the bottom, made profit, and then shorted for the 3rd time right here. Would have had a chance not to make a full profit, but at least make a little small profit or close it out at break even, as I saw this wick start to form. So I could have played this scenario a lot better if I followed my rules. And my rule is, when it comes to a zone, don't get emotional. Don't let the market sway you into a position that you shouldn't be in. If you want to short the zone, short it from the top, and that's it. If you want to buy the zone, you buy it from the bottom. And those are really the only 2 ways that you want to play a zone. So always remember that. That's very important. So then I come back on trade 45. This was the new little variation of my strategy that I was implementing when I talked about the momentum trade. So this is the 3rd version of that one. So on this one at 45, I went long here, expecting for the momentum move to continue up to yesterday's closing price, and I took 5 contracts here. So I'm taking size on this momentum move that I started to introduce, because this is something I've been practicing for a while, and I think I'm finally ready to bring it into my actual real trades. And so far, it's been working fairly well. I took this trade 4 times today, and I was successful 3 times out of 4, so that's not bad. So I just went long right here as prices came back up and got close to yesterday's closing price after they broke past this overall level of resistance that was located at 640. Caught about 10 points off of that one, so it wasn't bad. Then I came back on trade 46 right here, and I went long here based on the higher low support level. So I saw the higher low get formed. I saw that the trend was very strong to the upside at that time. So I just went long as prices came back to retest that support level, and then took it back up to the top of structure at that time. So I caught a decent trade right there. And then trade 47, that was the last one for today. There's a lot of trades, but they all made sense, and they were all for a reason, in my opinion. So at trade 47, I shorted 5 contracts here, looking for a momentum move as prices drop back to yesterday's closing price. And that's pretty much exactly what I was able to catch right here. And I got out once they hit Y.C.P. And that was pretty much my last trade of the day. Made about 8 points on that on 5 contracts, so not bad. And So overall today, man, it was a lot of lessons to be learned. When I first got done with this day, I really wasn't sure exactly how my performance was because it was so many trades. But now that I'm looking back through all of these, it really makes sense when it comes back to almost every single trade that I took. You know, every single loss that I took, most of them came from either trying to short. So let's just go back through the losses real quick. Trade one, that was a higher low loss, but I was just too early. Should have took that when I had a chance. Trades 3 and 4, not too much of a big deal. Part two, okay, I gotta remember sometimes a zone can have wicks. That's important. You gotta remember that. When it comes back to 11 through 15, remember, don't try and outsmart the market. Trade what's in front of you, not what you think. All right, trade 18, that was a loss, but you got to remember what the overall market context is. We're at all-time highs. So the short trades, they won't, it's not that they can't work, but they just have a lower probability. Okay, where are the other losses? 28 and 27. Well, don't go long from the middle of the zone unless you have a valid signal like we did at 25. 27 and 28 were not the same. 29, that was a momentum trade, but I just should have went short from a higher price. So that goes back to not shorting the lows of the entire swing, which is exactly the problems we ran into at 35 through 33 and also at 41 through 44. So that's pretty much where all my losses came from. My losses came from me just pretty much not making bad trades, but just executing the trades the wrong way. At all of these junctions for the losses that I took, I should have just either been flat or I should have been going the opposite way. And I think I was more than capable of being able to identify that. So it's just about making sure that you make the right decisions no matter how much profit you might be in. Because I think that played a major factor, because I actually want to show my performance today, because that's important. I did close in profit, but the way that I did it was just very undesirable because I was up for the majority of the day. All right, so this is my profit and loss history with commissions included. So let's look at that. All right, this one right here. So notice how throughout the morning session I was kind of up, down a little bit, up, but then down a little bit more, but not too much. I never got down by more than $150 in the morning session. And then eventually I started making good trades back to back to back, and I was able to run my profits all the way up to a high of 470, which I feel like was a pretty good day. I had a chance to stop there, but the market was still moving and I felt like I could make good trades, but I started to get into my head a little bit, and this is right around where trades 27 and 28 came in. So remember, when I was trading 27, where was it? That was the last trade before the zone actually broke out. So 26 was where I made my equity high for the day. I was up, and I was up by a pretty good amount. I was up by about 47 points, which is a great day for me. And I had a chance to stop, and I didn't want to because the market was moving. And if that's the choice that I decide to make, if I'm going to keep trading, I got to make the right trades. I think the mindset that I got into was, well, I got a lot of profits. I can afford to take some riskier trades because I have a cushion room. I don't think that's the mentality I should have. I think I should say, okay, I'm up on the day by a good amount. Let me continue to make good trades and the best possible A+ setups that I can take, so I can build on top of this good day that I'm already having. So this right here is where things kind of started to break down for me, right? So that's what we're looking at when we see that overall drop right here from 470 all the way back down to break even. Now, I think honestly, I should have stopped right here after I had 47 points in profit and then came back to break even, because something is going wrong. My loss limit for the overall day is 400, but I think I need to make that loss limit a trailing loss limit, meaning that if I'm up by 470, if I come back down to $70 in profit, then I should stop, because that right there is technically my $400 loss limit for that day. It doesn't matter if I'm looking at it from a perspective where I want my loss limit to be negative 400 just completely, like meaning that prices got to come all the way back down to 400 in the negative for me to stop. I don't think it should be like that. I should use a trailing one, and I think that's very important. Now, throughout the rest of the day, I kept taking losses, and even though I hit my loss limit right here, I came back down. It was $73 past my loss limit. I still kept trading, and I would say that's definitely not what I should do, because on a day like this, I was able to make that back, but I got to make better decisions in the future, because who knows if the next time this happens, it won't just continue moving down and down and down. So I got to have the discipline to be able to stop. That's very important. Now, yes, I was able to eventually end the day back in profit, and I made 18 points at the end of it all. But the way that I made that 18 was just way too volatile for my preference. You know, I don't want to have a equity curve that looks like that, that's all over the place. I want to have an equity curve that looks like a chart that's making higher highs and higher lows, you know. So I think that's the biggest takeaway I took away from today. Just if you're having a good day like that, make sure that you lock in those gains and make sure you're trailing stop. Make sure you trail your daily loss limit. Don't just keep it static and keep it at the same place. So that's pretty much all I have for you guys today. I learned a lot from all of these trades, and I hope you guys did too. I'll be back on Monday, ready to run it back one more time. But until then, you guys, have a good one, study hard, and take it easy.